Every accountant and bookkeeper knows how to prepare financial statements, but how many really understand how to prepare them so that it gives you a tremendous amount of insight on your business and on your practice to really generate maximum profit? So today we're going to dig into that and talk about how financial statements can have a major impact on your bottom line. One of the things that I think is critical in the success of any business, which includes bookkeeping and accounting practices, is the proper preparation of financial statements. So just as when you go see your doctor and they make you run a whole battery of blood tests, the person who's executing the blood tests might be able to give you a little bit of information about your corporal well-being. But at the end of the day, it's the doctor who will really analyze the information, and from the blood test, what they can discover about your well-being is unbelievable at times. So financial statements is a lot like that. It's the blood test that is taken. So people who prepare the financial statements may not be adequately positioned to properly assess the financial statements and pull out the information that's needed for you to make the right decisions as to what you need to do to properly become healthy.
Numbers and dates and numbers and numbers and dates and numbers and...
So it's important that you not only run the proper blood test, but that you analyze it properly. So by the same token, when you are having a financial statement, it is critical that you prepare financial statements in the same way as you prepare the proper blood test to derive the information that you need. And then once you have the financial statements at hand, that it be used to properly manage the well-being and the health of your organization. So today I want to explore that. And there are three things that to me are critical when preparing your own financial statements or how to use them. Number one is to prepare the financial statements in such a way that tells you a telling story about how to operate your business better. So in other words, the statements have to tell a story and have to guide you towards action that will in fact modify the way you behave and the way you operate. So now we've got the proper financial statements. The next step is to read the financial statements in such a way to extract that information properly. Because what's really interesting is you can give the same financial statements to the two different accountants or two different bookkeepers, and the information they're going to get out of it is going to be very different. In fact, it's the same financial statement. So why is it that some people are extremely good at extracting more information from certain sets of financial statements while others are not? And that comes from training yourself, studying it, and become more fine-tuned in reading those financial statements of yours. And finally, the third step, which is the most critical step, is to be able now to turn this information into action. Because it's all fine and dandy to be able to say, well, I've noticed that this is a little bit high, and you notice a trend. Well, big whoopee-doo. So you've noticed a certain trend. Now the next thing is, are you able to convert that information into an actionable step? Now one of the things that gets really interesting when you start studying financial statements and you start being better fine-tuned into reading your own financial statements, one that is really nice is that this is a service you can sell to your clients. So I'll admit, when I was first in practice, I had gone through all of the studies, got my designation, but I never really understood how to read my financial statement and how to convert that information into management actionable steps. And so because I was not able to do it with my own financial statements, needless to say, I could not help my clients manage their business better because I did not acquire those skill sets. Now, I had learned a little bit in school how to do that. Theory, all very nice. But I was fortunate enough to have a mentor who would go over my financial statements, and the information he was able to get out of my financial statements always blew me away. And it is working with him that I've learned how to read financial statements and convert what I was reading into actionable steps. And then what really was fortunate about that experience is that not only was I able to increase my own profits because I was able to use and read my financial statements better, but I could start now providing a consulting service to my clients and therefore value bill and get a lot more money for the ability to read and understand financial statements. One of the interesting part of being in practice and teaching people practice management, I find, is how different people will get different information out of the same set of financial statements. And I've done tons of presentations on financial literacy, about doing projections, and it always amazed me how different people will interpret the same information in very different ways. And that makes perfect sense, because what we need to understand is accounting and bookkeeping is not a science, but rather an art. And then, so it's a matter now of configuring the data in a certain way to provide you with that information and then interpret it for your own benefits. So what I'm going to do in a few seconds is I will put in front of you the financial statements of an accounting practice. And there are 3 questions I would like you to answer once you put this thing on pause. Is number 1, I want you to tell me whether or not this accounting practice is doing well or not. Number 2 is, what are you basing yourself on to determine or to come to the opinion that yes or no, that this practice is doing well or not. And number 3, I would like you to take a few minutes when it's on pause to really go over the financial statements and pretend that you were the consultant for this accounting practice. What would you tell the owner of this practice based on these financial statements? So like I said, I'm going to put the financial statements in front of you. Please pause it and answer those 3 questions to me. And then after, I will come back and give you my thoughts on these financial statements. So I trust you've done the proper exercise and really paused it. And the reason it's important that you do that, and if you haven't paused and you haven't looked at it really, go back and do it. And the reason for that is I think there is a better learning if you actually take the time to do the exercise and not just wait for the answer, is that you make an attempt to find the answers to those questions I was talking about. And the most important question is the third one, is what would you recommend to this accountant? So if you haven't done that yet, please go back, put it on pause, and come up with those answers as to what you would recommend to this practice to possibly improve the bottom line. So here are the financial statements to Jack Daniels Accounting. And so I'm not going to go over line by line, but I will make comments on some of these things and how I would interpret this information and what I would probably recommend if Jack Daniels asked me for my opinion on his financial statements. Now, mind you, I will admit that the statement is very, very short. You might say, well, there's not a whole lot of expenses on this expense statement. And obviously, I cut a lot of things out just to make it a little bit cleaner and simpler. But starting with advertising and promotion, we see $15,000. So the question should be, is that too much? Is that enough? Is it a good expense or not? Looking at these financial statements, there's no way of telling. So, but what it should do is should prompt the question, well, how beneficial was the $15,000 spent? So in this example here, if I was Jack Daniels' advisor, I would ask him to provide me with a general ledger listing of everything that he spent related to advertising and promotion. And then based on that, I would critique every amount that was spent, and the question I was asked, how beneficial was this expenditure? So I see here you spent $1,000 on this ad. Did you get anything out of this ad? And if you don't know, then you may want to reconsider doing that investment again next year. So basically, it's a matter of dissecting what went into advertising and promotion and determining whether or not you will reinvest in that particular investment again next year. The next item is bad debt. So we all know bad debt is clients that haven't paid you. So is $10,000 a reasonable amount? Well, I would say that it's way too high. So what can you do about it? Well, probably the first thing I would do is look at the contract that you have with these clients and possibly firm them up and find out whether or not the contract is right. The other thing that I would probably look at is really dissecting what happened last year. Who are these people who didn't pay you and why didn't they pay you? And you're probably going to find some failures on your part. So you might blame the client, well, it was just bad client and so on and so forth. But chances are the problem really with regards to bad debt has more to do in what you're seeing in the mirror. So in other words, you might want to take a look as to what did you promise the client? Did you catch the client by surprise with your bill? Maybe he didn't pay your bill because they weren't expecting such a large bill. Are they not paying because they were expecting the consulting to be free and it's not? So on and so forth. And I find a lot of times the bad debt is due to poor communication. The other thing that you may want to take a look at is whether you've got the right client mixture. So if you're finding that most of your clients are giving you a hard time, well, you may want to change the kind of clients that you accept and be a little bit more selective as to who you choose. And then, are you providing services to anybody who comes to the door? And then at what point do you force your clients to pay you? So if you're giving them the financial statements, you're e-filing, sending everything off to the government, the incentive now for them to pay you really goes down. Why pay me if you've already received everything? So that might be another thing you could do to reduce your bad debt, and that is to not provide all the information until you've received payment. So withhold the financial statement, withhold the filing of the return with the government, and don't be afraid of playing more hardball with your clients. And trust me, they're not likely to leave you because you require payment before leaving with the goods. And if they take objection to that, then the comment I would shoot back to them is, when you go into any store, are you not expected to pay right away? How often do they let you leave with the product and say, it's okay if you pay me in a month? No, they're going to expect you to pay everything right there and then. Why are you doing different? Why is it that we think that our services should be paid in a month from now? And all of this will have a tremendous impact in reducing your bad debt. The next item is bank charges. Well, I think most people would agree $500 of bank charges is probably reasonable, and I probably would not spend too much time on this one. But if I saw bank charges being extremely high, then I would probably take a closer look at my bank statements to see what gives rise to all of these bank charges and see if I can negotiate something with the bank. Office supplies, $7,500. Is that high? Well, it depends. And so you might still take a look at this $7,500 and ask yourself the question, is there a way of reducing office supplies? Now, there's a word of caution here. Do not reduce the quality of the paper and the product that you're giving to the client. So we put tremendous amount of stock into the paper that we use to produce our financial statements on. Because let's face it, all they get from you is 5 pages or so on a piece of paper or on several pieces of paper, bind it together, and they're paying a pretty decent price for that. So I usually want my financial statements to look as best as it can on proper paper stock. Now the question might be then, okay, so how do I reduce office supplies? Well, how many of you are adding to your invoice disbursements for your office supplies? So for every one of our clients that we do work for, whether it be bookkeeping, accounting, or tax services, we include disbursements. And the purpose of the disbursement added onto the invoice is to reimburse us for the paper and the software and everything that we buy related to servicing that client. So in fact, if you were to look at our income statement for my accounting practice, every year office supplies ends up being a negative amount. So in other words, we recuperate all of our office supplies and then some. Professional development, is that too high? Well, in fact, I would probably suggest that it's too low. If all you're spending in professional development is $200, then in my opinion, you're possibly not investing enough importance into training your team. You gotta make that a priority in increasing everybody's knowledge and their skill sets on all matters to the services that you're providing. And that's for yourself and your team. You gotta spend money on your team. Now, I'm gonna do a whole other presentation on that later on, because a pushback I often get is that, well, I don't wanna spend money on training them because once they're trained, they're gonna leave. Well, I'll have another presentation on that subject matter later on. Rent, $45,000. Is that a fair amount? Well, that depends. What does the building look like? What does the space look like? How many square feet have you got? How many square feet do you need? I've seen some people where they have 2 employees and have a crap load of square footage. Well, why do you have so much square footage for 2 employees? What you want to do is have efficiency. And on the other hand, if you know you're going to have growth and you're going to go from 2 to 5 employees and you've got space for 5, that's okay. But take a look as to whether or not it's money well spent. And I've always wondered as to whether or not your office really needs to be in a space where it's prime location or prime price. So give that some thought. You gotta weigh the value of what you're paying for your rent compared to what you're paying. Telephone, $1,200. My recommendation is obviously you want every expense to be as low as possible, which would include the telephone. Now, with that said, before you say to yourself, well, I want to reduce my phone expenses from $1,200 to $800, and the way I'm going to do that is to reduce the number of lines from 3 to 2 lines. Well, be careful with that, because you might be cutting into the meat, and if you're cutting into the meat, guess what? It's going to bleed. You want to cut away the fat. So before you start thinking about ways of reducing your phone, such as reducing the number of lines you have, you might want to give some thought to just leaving it the way it is, and in fact, you may want to increase some lines. So in other words, if people are calling you up and saying, I keep getting a busy signal, well, guess what? That probably means you're not spending enough on your telephone lines, and you may need to jack up that expense. So again, when looking at these expenses, yes, you do want to keep them down, but do not go totally wild with cutting them all. So the next item is wages. A question I get often asked is what percentage of the revenues should be wages? In other words, wages will represent what percentage of my total revenues? That is a question that cannot properly be answered. And the reason for that, it'll depend a lot on the size of the practice. So I'll give you an example. We have a small accounting or bookkeeping practice, and in the practice, there's yourself, you have 1 part-time or full-time bookkeeper and 1 receptionist, and that's it. Well, what's going to happen is because you have a receptionist and a bookkeeper, and you are probably generating a crap load of the revenues, you're probably going to find that the percentage of the expenses will be fairly high. Now, if you add on 2 more bookkeepers, what you're going to find is going to be a pretty good increase in revenues with an appropriate increase in wages, but the percentage is going to go down because the wages of the receptionist will now be shared amongst a greater group. And so it will show as if you are now more efficient. And this is especially true if the 2 new bookkeepers that you just hired are, say, have a utilization of 90% or more. So like I said, the percentage will change from practice to practice depending on how many employees they have, what they are doing within your practice, and so on. So the question is, how do I then determine what percent I want my wages to be of my revenues? Well, what I do is I recalculate it every year. So at the beginning of every year when I do my projections, I will determine what kind of people I'm going to hire, what their utilization, realization I expected to have, and then from there I can guesstimate as to what my wages will be relative to my revenues, and that is the percentage that I will be shooting for my current year, for my practice. And then next year, I will reevaluate, and what I expect as far as percentage will change again. So the next thing we're going to talk about are the revenues. And what's really interesting is oftentimes when I review financial statements with a client or even accountants and bookkeepers, their eyes will tend to go down towards the bottom of the income statement and focus their attention on the expenses. So we've already talked about the expenses, and I find that few people will exercise much time or thought about ways of increasing their revenues. And I would suggest that this is where you should spend the majority of your time in looking at ways, creative ways of increasing your revenues. And here's the reason for that. If you have a practice, so in the example that we've got with the Jack Daniels, where his gross revenues are about $500,000, what if he could increase his fees by 5%? Let's assume for a minute that he didn't lose any clients. All he does is increase his fees by about 5%. What's going to happen is it'll increase his net income by about $25,000. And the reason for that is because if he increases his fees by 5% and doesn't lose any clients, everything else in the income stays the same. So are utilities going to go up if he increases his fees by 5%? No. Are phone bills going to go up? No. Are advertising fees going to go up? No, nothing moves on the expense side if you increase fees by 5%. So if you can increase your profits or your revenues by $25,000, you will essentially have increased your profits by $25,000 because the entire amount of the increase goes right down to your bottom line. Now, what if instead of increasing fees, you just increase the number of clients you have by, let's just say, $10,000? Well, an increase in clients of $10,000 doesn't go all to the bottom, but most of it does. So on a $10,000 increase in clients, you should probably expect to see a $4,000 increase in wage expense, but none of the other expenses are going to move much at all. You're sure as heck not going to pay more for utilities because you've got more work coming in, and again, most of your expenses are going to stay about the same. So if you can bring in an extra $10,000 worth of clients, you will likely see an increase in your profits by about $6,000. Now here's where it gets really interesting, is that if you look at the whole financial statement, and we just did a dissection of your expenses, and let's just say that by dissecting your expenses, you were able to find savings of $10,000, $15,000 by fine-tuning certain things that you do. And then on top of that, you were able to increase your fees by 5% and pick up another $10,000 of new clients. Just those things alone will have an impact of about $50,000 to your bottom line. So isn't it worth the time and effort to possibly dissect your financial statements from top to bottom and trying to find ways of increasing your revenues and reducing your expenses? Absolutely. And the difference it can make to your bottom line can be phenomenal. So one of the things we haven't discussed is whether or not the $225,000 profit is a good profit for an organization. And I'd be willing to bet if I had 100 accountants or bookkeepers in the room, and I would ask them, is Jack Daniels' firm doing well or not? I get a whole variety of answers. Some people would say yes, some people would say no, and some people would say, I'm not sure. And actually, there's no way of knowing, just looking at those financial statements, whether or not he's doing well. And I'll show you why I'm saying that. So, if I were to provide you extra information, that is, I were to tell you that Jack Daniels has been in business for 30 years, he's been working his practice for the last 30 years, and this is where he's at after being in practice for 30 years. Many of you would say, well, after 30 years of being a full-fledged CPA, he's not doing all that great. Now, I'm just going to change the external information a little bit. What if I were to say that this is the second year of being in practice? Then I'd be willing to bet that most of you would say, holy crap, he's doing very well for himself. Now notice I did not change the financial statements on you. I did not change the numbers. All I changed was the external information that related to these financial information, and the answers to whether he was doing well or not completely changed. So whether or not a business is doing well or not needs external information to properly assess how they're doing. So you're usually going to compare your actual numbers with industry, in other words, other people who are doing the same thing you are. You're going to compare with prior year, and you're going to compare with projections. So for that reason, it is why I suggest that you have different financial statements. In other words, income statements presented in different ways. So I'm going to suggest 4 different ways of presenting financial statements. So before I share the 4 different ways that I tend to prepare my financial statement to get value out of my income statement, I would really appreciate you subscribing and liking this video if you see value in this. So given financial statements, standing on its own will provide you only limited amount of information. I find it's important that the current year financial statements always be compared to something else. So it'd be kind of nice if you could have financial statement compared to somebody else in the industry. But given that information not readily available, what I suggest you do is you prepare 4 different kind of presentations for your income statements. I'm going to go over them quickly with you. So the first one that I would suggest you do is we have the current year to date with previous year to date. So that, say after 4 months of operation, you can take a look at your revenues and expenses for the first 4 months and compare that to last year's first 4 months of operation. And what you're looking for are the huge discrepancies or differences from one year to the next, and look for tendencies. So if you notice, for example, that maybe the wages are much higher by way of percentage of your revenues, then you may say, well, why did that change? Is it because I changed a mixture of my work, or what is that? And by the same token, whenever you see any kind of increase in expenses that doesn't seem right, then it allows you to maybe dissect that to figure out what it is. The second financial statement that I tend to prepare is current month compared to last year's same month. So if I'm doing June's financial statement, I'm going to have next to that June of last year. So again, it gives me an indication as to how I'm doing for this June compared to the same month last year. And that information will also possibly pinpoint certain areas you may want to work on, because you're comparing it with apples. In other words, this June with last June. And then the third one is to compare current year to date with projections. Now, a lot of accountants and bookkeepers don't even do projections, and I suggest that you do. Now, I'm going to discuss the importance of doing projections and how to prepare projections in another session. So I suggest that you stay tuned and subscribe to our channel so that you can find that session on how to do projections and the importance of doing projections. You want to have financial statement that shows current year to date compared to projections. So you can say, I projected that after 7 months, I would have these revenues and these expenses. How does that compare to your actual numbers? And if they're close, okay. But if they're far off the mark, and especially if the variance is not good, then you need to explore, why is it that my advertising expense is so much more than I projected? Am I doing things that I did not foresee, so on and so forth? And if you find that your revenues aren't increasing like you had projected, then you may want to revisit the plan that you made. So these are all very important information. And finally, the fourth one is an income statement that shows current year, and then the second column, rather than being dollar amounts, make it a percent. So show everything as a percentage of your gross revenues. So if you're like me, I break up my revenues into the different services that we offer: accounting, consulting, auditing, bookkeeping, income taxes. And then all of that shows as a percentage of my total revenue. So it gives me an indication of what percentage of my revenues come from these different services that I'm offering. And then the same with all of my expenses. So all of my expenses show up as a percentage of my gross revenues. And it's fascinating how telling and how much information you're going to get out of that in not looking at the dollar amount, but just looking at the percentage. And that is really interesting information sometimes to look at, and will tell you all kinds of stories about your firm. And so, for example, if you had projected that your wages at the beginning of the year would going to be 48% of your gross revenues, and it's now sitting at 60, then you know you got a problem, because you had done your math, and according to your math, your wages should have been 48% of your gross revenues, but it's sitting at 60. That means someone on your team is not doing their job. So now it comes down to determining which one on your team is not pulling their weight. Is it you or one of your team? Again, we're going to have a whole different presentation later on the proper time and billing system that will now allow you to focus your attention on who is the person mostly responsible for you not hitting those marks. So I hope you appreciated this video. It was quite long, I'll admit, and pretty intense and heavy as far as information. But I would welcome you to maybe go back and re-listen to it a few times, because sometimes just too much information is too much information. But I think I shared with you a lot of ideas that I hope a lot of you will appreciate, that you'll find useful. And again, please don't be afraid of sharing it with other people. That's why we put it out there. And let's face it, even if your competitors find out how to read their own financial statement, it won't hurt your own practice. So it's the kind of information that can be easily shared with other people. And like I said, I would welcome your comment. I would welcome your thoughts and questions especially, because I'm always looking for ideas and thoughts of things that I can discuss with you guys and possibly be of help in producing a better practice. And on the subject of sharing information, I would welcome you guys to join our private LinkedIn group. And that group is really designated to allow accountants to share their thoughts, concerns, questions without fear of being judged and in a safe environment, but also an opportunity for you to share some of your wins and things that you've learned that you believe might be of help to other people. So this whole LinkedIn community that I've created is not to talk so much about taxes and accounting and auditing or bookkeeping or software, but rather on your practice and the things that impact your practice. So again, I welcome you to join this private LinkedIn community. Look below, and you're going to have the link there for you to join.